Hello and welcome to EBAday 2022 in Vienna. I'm Hannah Wallace, and joining me now in the studio to discuss the EBA Working Group's digital currency report is Tino Kam from Nordea and Daniel Szmukler from EBA. Hello to the both of you. Thank you very much for joining me.
Thank you.
Great being here.
Really good to have you in the studio and talking about a huge topic at this year's EBA Day. It's been at the centre of a lot of discussions. We're talking about the digital currency report, but also cryptocurrency, CBDCs, stablecoins, cryptotechnologies. I mean, big stuff. So tell us, what's been the buzz on the floor and what are people talking about around this topic?
Yeah. Well, indeed, I fully agree. And I think if you see the opening of today's event, CBDCs is top of mind of a lot of our speakers today. And because of that, I think this report is very relevant for our participants and members. It's going to talk about the question, what is CBDCs and why it's relevant.
All right, so coming to the report then, why now? Why is this investigation at the forefront of our minds?
So first of all, I think this is the second report on the same topic. So there's a follow-up on our working group. And this report is very much following up about what are the key pain points the CBDCs and the stablecoins is trying to resolve. And I think that's obviously quite relevant to understand not only about the technology, but why it is important for central banks, for commercial banks, and for the users of the CBDCs.
And Daniel, what are you hearing speaking to the other delegates on this topic, and what really stands out from the report for you?
Well, what stands out is that in our journey to explore the use cases for central bank digital currencies, we actually came across a number of challenges that central banks are trying to overcome by themselves becoming more and more players in the digital space. First of all is they are lacking a fully digital equivalent to cash. Today, if you think about it, cash is the only fully private payments instrument. The central bank controls the amount of cash in circulation, but no actor, neither a central bank nor a commercial bank, knows that a cash transaction has taken place in the economy. So this is why it's important not to confuse anonymity with privacy. CBDCs will create privacy in a payment instrument that is fully digitalized. So that could explain maybe why central banks have a particular interest in pursuing that. A second use case is programmability of payments or money in that case. Because again, if I take the analogy to cash carries inherently the value of the bearer. And the central bank is the sovereign that stands behind it, and that value is being backed up. You don't have that in any other payment instrument or in any other, so to say, cryptocurrency that is not issued by a legitimate sovereign authority like the central bank. So again, transposing this to the digital world is how can you have an instrument in place that actually transfers the value from sender to receiver with so to say, the money that is exchanged. And the third and last use case that we looked at is around the access. Because not everyone is a digital native and not everyone has maybe access to a smartphone or access to the internet. And so the question of accessibility remains also an important question to address. And so if you discuss these type of topics, you enter a space whereby you discuss interoperability as well. How does this relate to existing instruments? Fiat money, right? Existing transfer mechanisms. And that existence or coexistence is what I think many of our banks were interested to explore to understand their role in it.
Well, as you say, some important questions still left to answer then, and that's where the report comes in. So coming to the practical takeaways then, Tino, perhaps you could expand on what you think the response here should be.
Yeah, so I think the report is, to be honest, only scratching the surface. I think we have seen that we had input from 50 different participants, and there were 36 banks involved in 18 countries. So we had a lot of input, and there's so much happening in the market on this. And it's good that we are able to try to consolidate a bit about what's happening in the market, what's happening in the industry, and what are the different parties doing. And for me, the key takeaway on this is basically that we as an industry need to continue to work together and collaborate together to understand why this can become relevant for consumers, for wholesale banks and commercial banks. So how do we make sure that we as commercial banks can stay relevant for our customers using this technology?
All right, thank you, Tino. And Daniel, is there any lasting message you want them to take away from the report?
Yes, I do hope that we get the mandate to continue our investigative work, because as Tino referred to, we just again scratched the surface of the possibilities that CBDCs and stablecoins can bring. And I think many of our working group members believe that it's very difficult to take an informed decision on a moving target. And it's not clear at this stage what the policy direction will be of many central banks that are working on CBDC projects. In how far will they rely on commercial banks to do some of the traditional tasks around money creation that they have done in the past? And that, so to say, that relationship needs to be structured once a CBDC is conceptually finalized and before it goes live, because the role of commercial banks in this, as part of the transmission mechanism, is I think extremely important and should not be disintermediated.
Exactly, it's a fascinating space and indeed a complex one. So I urge anyone looking to learn more to go to that report. But gentlemen, we'll leave it there. I'll let you get back to the event. But thank you so much for sharing your insights.
Thank you.
Thank you.